seems to be there. We had, for example, Stan Druckenmiller, also David Tepper, adding to that negativity, the bearishness about stocks and what exactly is priced in. As for the bond market, Italian BTPs at 1.78%, so down 1.5 basis points, but really not any particularly larger move than the rest of Europe, I'd say. So we're negative 54 basis points for German yields. Those are the markets.
Let's bring in Ben Guttridge right now to talk about this and to give us a little bit of insight as to how our portfolios should be set up. He is the Director of Model Portfolio Services at Invesco. Ben, what do you make, first of all, of, we had this sweet bear market rally, but it looks like it's over now as everyone comes out and says there's no way we're going to see a V-shaped recovery.
Yeah, I think markets are sort of taking a pause for breath. I wouldn't have expected to continue once things are settled down in the vein that it had done since late March. But I don't think the market has behaved irrationally. The governments and central banks have taken away or gone to a large extent reduced the probability of some of those worst case economic scenarios. As a function of that, there has been something of a relief rally. But as we sort of move forward, we can see economies are reopening. It's going to be very gradual. That sort of lends itself to a modest but still a positive growth outcome. And therefore, markets were, as I said, I think were rational to rally. But of course, it had been quite vigorous. That does encourage a bit of taking some money off the table. The economic data is decidedly grim, and earnings downgrades are sort of still forthcoming. So I do think the market's behaving reasonably well, but we still retain an optimistic view on a 12 to 18 month basis.
Okay, that's interesting. I suppose where is that optimism placed? Because, of course, we get the GDP report for the Euro area and Germany due tomorrow, and that's also expected to offer, a lot of clues about just how bleak things are in Europe. Maybe things are better in the US. What do you expect?
Well, I mean, economic data is not going to paint a healthy picture. But whilst we don't expect governments to be cheering those data points, I mean, this is part of the strategy. It is to bring economies outside of essential services to a grinding, an immediate stop to prevent the threat of infection rates accelerating. So, like I said, this is part of the strategy. They want the economy to come to a near standstill so that they can have a better platform to restart with lower rates of infection. So, I get that those sort of numbers can be really sort of mind blowing and engender a lot of fear. But rational investors can deal with that, and I think we're sort of looking to the recovery rather than what has happened through April, which I think we all know is going to be horrendous data.
I wonder what you think, Ben, about the recovery. We know Goldman Sachs said there's going to be a massive drop in Q2, 39% GDP for the U.S., but a 29% recovery in Q3. You can agree with them or disagree with them, but I wonder your take on the U.S. recovery versus the European recovery. And a little bit later in the hour, we have a special Brussels edition. Maria Tadeo, our reporter on the ground, brings listeners up to date on what's going on in terms of border openings. To me, this is a huge part of the recovery, right? In the U.S., if I'm in Ohio and I want to take a vacation in Florida, in a couple weeks, I can go and spend my money in that economy and move cash around. Here, in Berlin, if I feel like going to Barcelona, that ain't happening.
Well, I think you're right. I think my base case, our starting position, is that the U.S. economic recovery will be a little bit more vigorous and is starting from a better platform, both because of the sort of the fluidity it can enjoy across states and, of course, the scale of the fiscal stimulus. But there are threats to the U.S. economic recovery, and there are also some tailwinds that we might start thinking about as we move through the year for Europe. Obviously, in the U.S., it could be considered that they're reopening some states a little bit too fast. I don't think that's entirely clear from the data. The infection rates still sort of seem under relative control, but that is, of course, a threat. And if those hotspots spread out, then you could easily see a reversion to lockdown. In Europe, it is slow, and fiscal policy has not been generous enough. But as is Europe's sort of way, we do think it will get there. It'll just be late. But the external demand is, of course, of great importance to Europe. And there, I think there is something more positive. The China reflation story is that, they seem to have thrown off all the shackles in terms of their deleveraging campaign. So I think that is going to be a building story as we move through the year.
Yeah, I suppose there's also a big debate about, Germany and the export-led countries, whether that is the kind of model for the future. But I also want to get your view on the UK. I mentioned Rishi Sunak, the idea that the UK's in recession or will be over the coming months, and then that the Bank of England governor talking about bond buying, the expectation that will be expanded. The UK, though, is not reopening as quickly as Europe is, even though today was meant to be the big kind of back-to-work day that the Prime Minister had been touting, but it hasn't happened.
No, well, I do have some concerns about the UK economy. Our head of government relations used to work with government members, and sort of speaking to him, he worked in the Conservative government. There is still this, firm ideology that they're reluctant to extend fiscal support. Now, of course, they've made great strides away from that ideology. And they've extended the furlough scheme till October, but we can see that companies need to contribute to that in August. And I just do think there is this eagerness to reopen and eagerness to remove fiscal support as soon as possible, given their sort of conservative sort of principles. Of course, they're not delivering that today, but over the medium term, I would have liked to have seen for the UK economy's benefit even more generosity and even more clarity that they're not looking to take these sort of support mechanisms away.
Okay, so don't remove the support too soon. Thank you so much, Ben Gushridge, Director of Model Portfolio Services at Invesco. Really great to have you on Bloomberg Radio. Thank you.
Let's get over now to Leanne Gerrans for your global news headlines. Leanne?
Matt, good morning and thank you. Let's start here in the UK, where the government is getting a boost to its plans to ease lockdown restrictions. The UK Health Authority has cleared an antibody test from Roche. These tests can identify people who previously had the virus and may now have a degree of immunity. However, scientists still aren't sure whether having antibodies means the immunity will be long-lasting. Staying in the UK, British Prime Minister Boris Johnson is facing more pressure over his handling of the coronavirus crisis. His Chancellor, Rishi Sunak, warns the country faces a significant recession. GDP fell almost 6% in March, and Johnson was criticised over the spread of the disease in care homes. More than 8,000 people have died there from the virus. Doctors in Italy have found the pandemic probably triggered a 30-fold increase in cases of a serious but rare inflammatory disease in children. Bloomberg's Jason Gale reports.
A detailed analysis from a hospital in Bergamo found 10 cases of a Kawasaki disease-like illness in children. It adds to reports of about 90 similar cases in England and New York. The Italian study, published Thursday in the Lancet Medical Journal, provides an ominous warning to other pandemic-affected nations about the risk to children. Kawasaki is a rare condition that typically affects children younger than 5. In Melbourne, Jason Gale, Bloomberg Daybreak Europe.
And the Prime Minister of Japan, Shinzo Abe, is planning to keep Tokyo and Osaka under a state of emergency. But he's planning on lifting it earlier than scheduled for 39 of the country's 47 prefectures as coronavirus cases slow. Bloomberg's Isabel Reynolds has more.
Abe is expected to formalise the decision later in the day to remove most of the country from the emergency status that was previously set to end on May the 31st. Japan has confirmed more than 16,000 virus cases with about 700 deaths, far lower figures than those seen in the US and parts of Europe. In Tokyo, Isabel Reynolds, Bloomberg Daybreak Europe.
Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
NJIT, New Jersey Institute of Technology, makes innovation happen. The university helped biomedical engineering professor Tara Alvarez launch a startup that may revolutionize vision therapy.
Our startup through NJIT is called Ocular Motor Technology. We create virtual reality vision therapy in a head-mounted display. So it's gaming, and basically we're sugarcoating the therapy so that children and young adolescents don't even realize they're doing therapy. To To accomplish this, we need biomedical engineers, which are here on NJIT campus, computer scientists, artists, people that are into story development, and then we're collaborating with a lot of the large pediatric medical centers. This idea of a startup culture is extremely important to not just NJIT and the National Science Foundation, but also to the U.S. as a societal whole.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Today, nearly all business is international business. The same goes for business disputes. That's why the International Center for Dispute Resolution provides a faster, more efficient approach to dispute resolution across borders. Backed by the American Arbitration Association, the ICDR is the world's leading provider of dispute resolution services. Find out why global expertise matters. Visit ICDR.org.
Adopt US Kids presents What to Expect When You're Expecting a Teenager. Learning the lingo.
Jelly. Jelly adjective. Jelly is a shorter, better way to say jealous. As in, Chloe, I am like so jelly of your unicorn phone case.
You don't have to speak teen to be a perfect parent. Thousands of teens in foster care will love you just the same. Visit adoptuskids.org, brought to you by the U.S. Department of Health and Human Services, Adopt US Kids, and the Ad Council.
Influential conversations from Bloomberg Television. Here's Sherry Ann.
David Tepper is the latest billionaire investor to challenge current stock valuations. The founder of hedge fund Appaloosa Management says stocks are the most overvalued ever outside of 1999. He joins Stan Druckenmiller and Carl Icahn in warning about the stock market, which has rallied almost 30% from its March low. Let's now get another point of view from Jay Pulaski, co-founder and CIO of TPW Investment Management. Jay, great to have you on the phone. So you see more support for equities despite the rally that we've had. Why?
One doesn't tend to want to go against voices like Stan Druckenmiller and David Tepper, but I think there is a case to be made for risk assets continuing to perform as we go through the second half of the year. And I'll just lay out 5 or 6. First is the global policy support, which is unprecedented and I think ongoing. We call it rolling thunder. Second, economies have already bottomed, right? The thing about COVID-19 is the speed, and people really have trouble understanding that the worst of the economic news is, in the most part, already behind us. Third, we have zero interest rates. Stocks, therefore, look very attractive.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings.
Markets, headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on QuickTake by Bloomberg. This is a Bloomberg Business Flash.
Good morning from Bloomberg's world headquarters in New York City. I'm Anne-Marie Hodderm. This Bloomberg Radio Business Flash. It's a risk-off day across global equity markets. That rally from the March lows is showing more signs of stalling this week. We've heard from a lot of big names really pouring cold water on that, but also the Fed Chair Jay Powell yesterday warning of a threat of a lasting downturn. The U.S. futures are in the red this morning, and we also have European equity futures as well firmly in the red this morning. The FTSE 100 down 1 0.7%. The CAC 1 0.9%, and the DAX 1.5%. On the Stock 600, the benchmark index, every single sector is lower today, and it's led lower by travel and leisure, insurance, and automakers. In the currency market, I'm looking at the Australian dollar this morning. It's down 0.3%, really taking a leg lower against the U.S. dollar. Data showed a record plunge of over 500,000 jobs in April in Australia. And then the U.S. Bloomberg Dollar Index, we are a touch higher on that, 0.1% higher. Of course, today it is Thursday. We get the latest jobless data out of the United States. And in the oil market this morning, WTI and Brent both up more than 2%. Brent trading $29.90. The IEA was just out 18 minutes ago with their latest report. They see the oil market improving, but world oil production is on track for historic decline this month, lowest level in 9 years. This, of course, as producers start rationing back production. That's a Bloomberg Business Flash. Now here's Leanne Garens with more on what's going on around the world. Good morning, Leanne.
Good morning, Anne-Marie, and thank you. In South Korea, the number of coronavirus cases linked to nightclubs in Seoul has increased to 131. Officials have been trying to reach thousands of people who may have been exposed to the virus at gay nightclubs. This comes as concern grows over the possibility of a second wave of infections in South Korea. Germany has recorded the highest number of new coronavirus cases in 5 days as the government gradually lifts restrictions on daily life. But the infection rate still dropped below a key threshold. There were 927 new cases in Germany this morning. Fatalities rose by 123 to nearly 7,900. That's the highest daily death toll since the 7th of May. And Uber has issued new safety guidelines to make drivers and passengers feel more comfortable during the coronavirus pandemic. It requires all people to wear face coverings as the infection spreads across the world. Here in the UK, taxi firm Addison Lee will fit partition screens between drivers and passengers across its 4,000 vehicles from next week. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Jan Gerrans. This is Bloomberg.
This is the Brussels edition, Bloomberg's briefing on what matters most in the European Union this week.
So good morning and welcome to another special episode of the Brussels edition. And this week we're going to be looking at the tourism industry because it really is that time of the year. Normally by now we would have booked a holiday, would be looking forward to spending time abroad. But of course, this is a very different summer. We know that flights have been halted. People are not really able to travel easily from one point to another. And there will be very strict health restrictions. So the question is, can you really save the summer season, and just how likely is that going to be? And to talk about this, I'm now joined by Tony Roldan, who